Let me introduce our team members in Group 4. Me, Mazlina, as the first presenter, Iman Najwa will be the second presenter, Nur Fatiha as the third presenter, fourth presenter will be Siti Rohayu, and fifth presenter will be Farah Nadia, and the last presenter will be Afifah Nadia. What is the Environmental Management Accounting, or EMA? EMA is a management accounting system and practice that provide information about the environmental impact of an organization activities. EMA also can be defined as a process of identification, collection, and analysis by using two types of information for internal decision making. First is the physical information, second is monetary information. Let me see what is the physical information and what is the monetary information. Physical information is a flow and rate of energy, water and mineral, including the waste. It more focused on supplying the information to the management. Example, how many liters of water have been used? And the second one is the monetary information. It related on the cost, earning, and how much it can be saved. Other than that two information just now, management information also can be included in the decision making. First, they need to identify and estimate the cost of environment related based on the related activities. Second, identify and monitoring the use and the cost of resources such as water, electricity, and fuel so that the cost can be reduced. Third, make sure environmental consideration form part of the capital investment decision. Fourth, exercising the likelihood, the impact of environmental risk. Fifth, include environmental related indicator as part of routine performance monitoring. And last, do the benchmarking activity against the environmental best practice. Next, Iman Najwa will present about the application and the focus area of EMA. Thank you.
Hi, Assalamualaikum. My name is Iman Najwa. I'm going to present on focus area of environmental management accounting. First area is product pricing. The pricing of the product should not only determine the cost of production but also the environmental costs that may incur. It is to help the company to understand the pricing of the product more effectively. Second is capital budgeting. Capital budgeting is the higher level of accounting in terms of the future, which indicate defined cost of action when environmental issue and not only reporting. Third is investment appraisal. Technique that used to determine is for investing in between alternate options. For example, the situation where a project has a lot of costs related to the environment, while including the cost in investment approximation and capital budgeting. The company can make a better decision as well as can bring more benefit to them. The fourth is the calculation cost. It helps the company to calculate the direct and indirect costs that relate to the environment. The last one is setting performance target. The company environmental management cost can be used to set a strategy of achieving specific benefit of cost. It can be a vital part of any operation. That's all for me. Next, I will pass to Nur Fatiha will present on category of environmental management accounting. Thank you.
Assalamualaikum. I, Nur Fatiha, will present the category of environmental management accounting. Have four categories. First, environmental protection cost. That is the cost of activity undertaken to prevent the production of waste. Number two is environmental detection cost. The cost incurred to ensure that the organization complies with regulation and voluntary standard. Number three, environmental internal failure cost. the cost incurred from performing activity that have produced contaminants and waste that have not been discharged into environment. And the last one is environmental external failure cost. That is cost incurred on activity performed after discharging waste into the environment. That's all from me. I will pass to next presenter, Siti Rohayu. Thank you.
Hi, my name is Dora Ramli and I will present about benefits of EMA. First is benefit of implementing EMA. First is improving sales and reduce erosion. Consumer awareness of product and service environmental impact is increasingly influencing their preference and buying behavior. Second is reducing costs. Reducing wasteful consumptions of input resources have a direct positive impact on reducing costs. The third one is reducing the cost of failure. Investing in processes that reduce the likelihood and cost impact of failure, such as the need to process waste. Fourth is improving the image of an organization. Enable it to attract better talent, reduce talent attrition, and change higher prices. Okay, second benefit is benefit of EMA to industry. First is ability to accurately track and manage the use and flow of energy and materials. It includes pollutions, waste volume, and type and waste. Second is ability to more accurately identify, estimate, allocate, manage, and reduce costs, particularly type of environment costs. The third is most accurate and comprehensive information for measurements and reporting environmental performance. It helpful to improve company image with stakeholders. The third is benefits of EMA adoptions to government. First is government EMA data can be used for environmental and other decision-making within government operations such as purchasing, capital budgeting, and federal facility environmental management system. Second is government EMA data can be used to estimate and monitoring financials and environmental performance indicators for government operations.
Hi, Assalamualaikum. My name is Farida binti Umar Rusli, and today I would like to present on challenge in implementation of EMA. The first one is lead to ineffective communication between the accounting and other departments. Every department have different goals and perspective with respect to EMA, which is type of activity. Departments such as the accounting environment and technical personnel often use different information system, resulting from the lack communication between the accounting and other professionals involved in environment management. The second one is material use, flow and cost information are often not tracked adequately. Although large companies annually generate millions of data records regarding the material movements, which is from the software system, and the available information often still not sufficiently accurate and effectiveness. The third one is many types of environment-related cost information are not found in the accounting record, which is accounting record typically do not contain much information on future environment-related costs because accounting systems have traditionally looked towards the past. Accounting record also lack many other less tangible environment costs. The fourth one is investment decisions are often made based on incomplete information, which is many companies have simply not considered the full range of environment-related costs needed for good investment decision making. Organizations need to ensure that environmental manager, technical expert, and accountant work together to provide the full picture of environment issue and related costs and benefits that are relevant for making investment decisions. Next is introduction climate change. Climate change is a process, a major risk to the global economy. To avoid dangerous level of climate change will be take immediate action aimed at mitigation and substantially reducing greenhouse gas emissions. Managing and mitigation climate change must be embedded in decision making. When it comes to capital expenditure and investment decision, it is vital to apply the principle of sustainable procurement and consider long-term implications that affect the financial, environmental, and social rather than short-term costs. That's all for me. I pass to next presenter. Thank you.
Assalamualaikum. My name is Afanada binti Rosli. I will present about the accounting to climate change. Okay, the first one is strategy business objective, which is research shown that many recent companies fail to ignoring the massive change. Many organizations are looking at the report on getting assurance over historical activities. These are the three objective, which is to manage the risk of climate change, to measure environmental impact, and the third one is to deliver real and sustainable change in operational activities. For the second one is implication of climate change. Climate change affect business as in profitability and values in two different types, which are direct and indirect impact on the business. For direct impact, observe sign of climate change such as temperature increase, and for indirect impact arise from the shift in social, economic, and political structure. Okay, there's a barriers to climate change with this. A key barrier to taking climate change seriously is the need for discipline and robustness around the measurement of the problem, and something that finance function can bring to the issue. And these are the barriers of climate change, which is needs of discipline and reliability around the measurement of the problem, and finance team are least likely to have a formal role in climate change policy implementation. And the best practice for the management accounting toward climate change is the finance team are stewards of the process and pull together material for the management and development of all sorts of initiatives, including those specifically focusing on delivering sustainability targets. So below are the ways to overcome barriers to more widespread acceptance of the sustainability agenda. The first one is focus on cost saving. Climate change is not considered an issue when it comes to environmental initiative. And the second one is use measurement tools, which is investing in tools allow us to measure electricity consumption and to weigh our waste also help a lot. And the third one is highlight customer motivation to be low carbon consumer. We need to be ahead of the curve in terms of environmental issue and regulation if we are going to retain our market share. And additional notes for barrier change, which is like from the organization team, which is lack of external pressure, and the which is high cost factor that make climate change an issue that businesses can no longer justify. According to a survey of a business consultant, many of them place little importance on addressing climate change. The second one is higher cost. Sustainability survey believe adapting to the impact of climate change will rise costs. The efficiency, economy, and value for money drive the decision making from the organization. Okay, the second one is from barrier from finance team, which is lack of time. Finance professionals are unwilling to give more than support to climate change initiative. And the second one is lack of specialist knowledge or skill. The most common reason was that finance does not have the specialist knowledge and skill needed to make decisions on how the best to tackle the issue. That's all from me. Thank you so much.